Start off with a welcome and introductions. My name's Mel Mills. I work for Big Society Capital, and along with Ishita and Festus, are responsible for good finance. This webinar this afternoon is all about navigating loan finance options during the current crisis that we find ourselves in for COVID-19. And I wanted to start off by explaining, I suppose, and covering that there's obviously a range of support available, including from a wide range of support from government and also for grant funders for social enterprises and charities during this time. And for many, those forms, whether they are government funded schemes or grant funds, will be the lifeline that is needed by a social enterprise or charity at this time. But social investors have been working at speed in order to respond to the crisis, supporting primarily their existing investees and also exploring ways to support organisations where repayable finance is a viable option. So this is something we say at Good Finance over and over again. We completely understand that repayable finance won't be suitable for all social enterprises and charities, in fact, probably not for many. But this webinar is designed to look at the options available and find out where it might be. So joining us today, I'm really pleased to say that we have Stephen Waud. There we are, lovely, thank you, Luna, changing the slide for me. From Business Enterprise Fund, Rob Benfield from Social Investment Business, and Tekla from GMCVO, and Ishita from Good Finance. So before we kick off and get over to our panels, just a couple of bits and pieces. We will be using the question answer format, which you should be able to find at the bottom of your screen. So as the panelists present, if you think of something you want to ask, please do jot it in there. The panelists themselves may respond directly, but we'll try and cover any interesting questions that will be relevant to the rest of the group as we get to them. I thought I'd do a little bit of context setting, if that's okay. Facilitators opportunity just to set the scene and talk about a little bit about where repayable finance might be relevant. So I've read a lot of stuff and I've heard a lot of stuff, and let's start off by talking about cash flow. Those adage, the words cash is king, is a term that many people will have heard of. And essentially, in fact, we covered this in one of our Jargon Buster series very recently. Cash, the money that you have in the bank on hand, which often pays wages, VAT, any overhead, or regular costs. And we're hearing a lot that cash flow, and sometimes that's referred to as liquidity, is the key challenge being faced by many social enterprises and charities. Actually, it's not a massive surprise, because even before the crisis, it was the reason that repayable finance was most often sought within the sector. But what do we really mean when we talk about cash flow? So for many social enterprises and charities, they have simply and very difficult sort of lost revenue. So for instance, if you are a theatre, a cafe, a restaurant or a leisure centre, this isn't income that is going to be regained, the past income. It's only income that can be regained in the future when we can start to trade again. In this situation, and for some of those organisations where income is not delayed but lost, repayable finance might not be a suitable option. So as we talked about before, grant funding, fundraising, using your reserves if you have them, and other government support available might and could be the most appropriate options. But there are a number of other scenarios that social enterprises and charities are facing, which we also hear a lot about. So I think it's very difficult if you're a social enterprise or charity in one of these categories and not in the other, but I thought it would be useful to share. So first scenario is there's ever more demand for your services. So let's say you have a local authority contract and you need to scale to deliver now, but you know you're going to get payment in arrears. And essentially what you need is bridging finance. So money to be able to get you from here to here. Sort of borrow now, get paid later and repay. And some of the examples of organisations that perhaps find themselves in that situation, there are some bigger social enterprises and charities and some smaller ones, particularly working in the field of mental health, that find themselves in those positions, people like Big White Wall, citizen coaching. There's also a lot of organisations that come into a second category of looking to pivot your business model. So that's the answering the question, can you do what you did pre-COVID in a different way? And there are some fantastic, very resourceful organisations that have gone online or provide sales in a different way they do, whether that's delivery. We had a great webinar and podcast with the Crawford Arms Community Pub just a week or so ago, and they shared how they've taken on investment and grant actually to help them through this difficult time. And then lastly, we've got what we would call the business as usual, and that's probably where the model actually hasn't been terribly adversely affected. Maybe they can carry on with their plans as before, and I think Tekla's going to take us through some of those. So probably for the first scenario, and sometimes perhaps the second, repayable finance could, in the short or medium term, be an option, and it needs to be accessible relatively quickly. Now, I'm also very minded that we're really good at using jargon and also lots of acronyms. Unfortunately for us, government made this right mouthful, so I thought I'd start by explaining it and probably come back and do that again later on. So we're probably going to end up using the term CBILS, so Corona Business Interruption Loan Scheme. That's why it's such a mouthful and why it's got an acronym, CBILS. Was one of the first things that government announced. But what we're going to do now is we're going to hand over first to Rob from Social Investment Business and then to Stephen from Business Enterprise Fund to talk about how CBILS has become accessible to social enterprises and charities. So I'm going to put myself on mute and hand over to Rob, and he's going to tell us a little bit about Social Investment Business, about the Recovery and Resilience Loan Fund, and how CBILS essentially might be working and what they've perhaps learned and found so far. Thanks. Over to you, Rob.
Thank you, Mel. Hi everyone. Very pleased to be invited to this call to share some of the things around the Resilience and Recovery Fund, why we've set it up, and also give you an idea of how it's actually working or changing, because we're changing it every week to adapt to the situation. So I think it's quite a challenging time, and we're trying to adapt. So first of all, I work at Social Investment Business. For those of you who don't know, Social Investment Business is a not-for-profit organisation. We've been around since 2002, and essentially our mission is to provide support and funding to charities and social enterprises, and not the broader SME market. So we just provide loans, grants and support to charities and social enterprises. And since 2002, across a mixture of those, we provided around £500 million of grants and loans to over 2,500 charities and social enterprises. So there may be some people on the call that we've worked with, or you may have heard about us, but you may not have. So that is just a very brief background on Social Investment Business, on what we're here to do and here to support. I'll move on to the Resilience and Recovery Fund and why we set that up, and how it uses what we've already referred to as CBILS, the Coronavirus Business Interruption Loan Scheme. So the Resilience and Recovery Fund is a new fund for social enterprises and charities. It's been initially seeded with 25 million of money to deploy, but we're raising further money on top of that. So we should have a reasonable amount of money to deploy, but as I'll come back to later, it is a pure loan scheme and won't be suitable for everyone with other sources available. The primary purpose of the Resilience and Recovery Loan Fund is to provide emergency liquidity through the form of debt, supported by CBILS, or the Coronavirus Business Interruption Loan Scheme. And the Coronavirus Business Interruption Loan Scheme is a guarantee provided by the British Business Bank or the government to us as a lender. We receive a guarantee that we can recover 80% of losses that we make on the loans. And it's important to stress that that guarantee is not to the borrower, who are 100% liable for the loan in all cases. What that guarantee scheme enables lenders to do, such as us, is actually to enable us to raise capital and to lend it out despite low visibility in a really high risk lending environment. And without the power of that guarantee to us as the lender, we wouldn't have been able to set up the Resilience and Recovery Fund, raise capital, or be able to be lending in this uncertain environment. So the guarantee is to the lender, not to you as the borrower who are liable for the loan. But what it's done is enabled us to lend. And I think the Business Enterprise Fund is in a similar situation of using it, but for different purposes. So as part of the Resilience and Recovery Loan Fund, while I said the main purpose is to provide emergency liquidity and to use that guarantee scheme, we also see the purpose as to fill gaps. So particularly in our sector, where other grant capital is coming available to certain sectors, we may be able to use the loan fund in areas where there isn't as much capital available, or for situations where companies, organisations can borrow and repay the debt. But for many grants will be a solution here and not the loan. I mean, to move on to who we're working with, this loan fund is really a collaboration across the social investment sector. So although CIB is leading and managing the fund, we're also partnering with Charity Bank, Social and Sustainable Capital, and Big Issue Invest initially, and working with them and their customers to assess and provide access to the money, and to scale up so that we can actually assess a lot of applications very quickly and get the money over to you within 3 or 4 weeks from application is the time frame from application to dispersing the money. In terms of the product that we're offering to the sector, it's a 3-year loan of £100,000 to £500,000. A key feature of the Coronavirus Business Interruption Loan Scheme is that the government pays the interest for the first year, for the first 12 months, and it also pays any arrangement fees in the first 12 months. So although the loan carries an interest rate of 9% interest and 4% arrangement fee in the first year, that if you agree to it being covered by the government, that is fully paid and you pay no interest or fees. We also offer a 12-month capital repayment holiday. So essentially, there's no capital or interest or any payments made by you as the borrower within the first 12 months. After 12 months, provided that you make the first payment, the interest rate drops down to 6.5% for the life of the facility. For loans under £250,000 or up to £250,000, we take no security, and above that, if readily available, we will take a charge over the assets of your organisation. And so I think most important, probably the most interesting aspect is actually explaining the type of organisations that are coming to the fund and who we funded, to give you a real sense of who this fund is supporting. And it's actually, when I say it's changed, our assumption has completely changed on the type of funding we're doing from what we envisaged when we set this up 4 weeks ago. So when we first set up the fund, we have 3 purposes that are included. One was lending until government payments are received. We thought there'd be a delay in government payments through furlough and other things. We've received 0 applications for delays in government payments. So that tells one story, that potentially the government is getting money out there, but that was one thing we thought we were doing. The other thing we thought we were doing is lending to cover delays in trade payments or trade debtors that are frozen up. again, we had one application for that. So we've not had much demand for freezing in trade debtors, or people not making payments as part of contracts. And those were the two key things we thought we'd be funding. So the fact we've had no demand for that is quite significant. We've only had a couple of cases where lending's been required to support the scaling up of an existing business model to service increased demand. And the vast majority, or 85% of applications have actually been for revenue shortfalls, or effectively temporary losses as part of the impact. So we're reviewing the fund about how we can adapt the fund to better support that demand or need, because it's changed completely from what we were expecting. The other big change, which is worth mentioning, is a couple of weeks ago the government removed a restriction on eligibility where registered charities could initially they could only be eligible for the fund if they had more than 50% of their trading income, and the government removed that restriction a couple of weeks ago. So what that has meant for us in our sector is we've seen a significant number of charities applying. So I'll give two examples and then probably leave it there. Is the first two cases, one was a national charity that applied for 200. The first two approved cases, one was a national charity that applied for £250,000, and it was to cover several things now that the trading income had gone. One was they didn't get £100,000 from the London Marathon, where they had 50 runners, so they needed to cover that. They had lost £100,000 from, or was delayed from in the probate system that had been left in a will through legacy money. And then they had £60,000 from general doorstep or street collections that they would normally expect to raise. So that was an organisation that at the beginning of this scheme wouldn't have been eligible, but that was one of the first ones we funded. And then you compare that to a trading social enterprise. There was a large borrow. We approved £500,000, had a chain of 20 nurseries around the UK where their trading income had frozen up because then there's no one attending those nurseries and they're not receiving payments. So I think what we're finding is we're servicing very different needs to what we initially thought. And because of changes to the scheme also, we're able to lend to charities as well as social enterprises more than we initially thought.
Right, that's lovely. Thanks, Rob. Bang on time, which is great. I think one of the things that we'll definitely come back to is it's really interesting to hear how, being so quick off the mark, we've had to learn and shape, and it's been really good for you to reflect to everybody that's on the call how things are changing. How sometimes where you think demand's going to be, if you have to be a first mover, then it's good to see that you've been able to respond to what the sector needs. And I'm sure there'll be some questions there, particularly around the sorts of sums of money that you thought people would need where you actually started, and we'll come back to that in the questions. Now, I think just before I introduce Stephen, one of the things that was particularly interesting is when the government came out with the Corona Business Interruption Loan Scheme and actually a whole range of other government support, we were doing some daily analysis on, did that mean a charity or social enterprise was applicable? And I think one of the things that was really interesting about CBILS back at that stage is technically it should have been accessible to social enterprises and charities who at that stage traded 50% to cover the latter change. I think one of the things we were really concerned about is whether actually the lenders who were making that lending would understand social enterprises and charities, and therefore whether they'd actually in real terms be able to get hold of it. One of the differences that people may or may not know is that the whole range of organisations across the UK, another acronym for you, CDFIs, Community Development Finance Institutions, they do a range of different things. Some of them lend only to SMEs, some lend to SMEs as well as charities and social enterprises, and some actually are dedicated and only lend to social enterprises and charities. So I'm going to hand over to Stephen, and he is going to tell you more about CBILS, and how it particularly works within the Community Enterprise Investment Fund, and again, some more practical stuff about the types of lending and requests they're seeing. Over to you, Stephen.
Thank you, and hopefully there's going to be a presentation coming up on the screen that I can go through. Whilst that's happening, I'll just explain what a CDFI is and how BEF fits into all of that. So BEF is a community development finance institution, which is a long way of saying we are a financial institution with a conscience. That's how I like to describe ourselves. And so can I press this myself there, or do you have to click it on there, Mel? Oh, okay. So we're ethical, we're social impact driven, and we're business lenders. And if you just click the next thing there for me, we demonstrate that even as lenders to SMEs as well as social enterprises, we've been around in the UK for about 22 years, and we have an excellent track record of lending to the types of organisations who struggle to find finance. And I think the key thing to the motivation behind what we do is this idea that we're using finance to improve communities. And generally speaking, and this is important on the lending that happens with CEIF, you will find that we're actually lending predominantly in the hardest to reach communities in the UK. If we just click on again, thanks. The other thing is, we're not afraid of technology. Yeah, we have pen and paper. Yeah, we still use that, but we have moved towards some of the more techie stuff. So the reason why we've moved towards the techie stuff is because we recognise for a lot of organisations, securing finance in a reasonably quick order is critical to their business continuity. So generally speaking, you can apply online, and a few days later, assuming that you tick all the boxes and you're a viable business, etc., you can have the money in your bank account. And if we click on again, and the one thing I think is absolutely critical, and you'll find this with any organisation like ourselves, including CIB, we have different matrices for assessing the viability of a business, but the absolutely key thing for us is impact. So whilst we have a scoring system, what impacts our scoring system more than anything else is how much will that affect the communities that we serve. So a third of the weighting of our score is taken up on the impact that we use. So let's move on. And by the way, it is great up north. The sun is shining and the scenery is lovely, but I just thought I'd throw that one in there. So just at a glance, this is the kind of stuff that we do. We've been supporting 384 clients this year, 234 new businesses started, £11 million worth of investment, 540 jobs created or safeguarded. This was up to the end of March. This has all gone out of the window since the end of March, by the way. We've pretty much done all of this again in the last 2 months, but I'm just sticking up to the end of March. And that equates to adding a 44 million quid to the region's economy. And if I click onto the next page, you'll see that I won't go through all of those, but that's the kind of stuff that we've done in the last 8 years. I think the key to all of this for CDFIs is I can't emphasize this enough, it is about impact. Now, social enterprises, because all CDFIs tend to be social enterprises, all social enterprises are about impact, but we are particularly motivated by impact. If you cannot prove impact, then you are just not for us. So if you're a single wealthy individual who just wants to borrow from us, you wouldn't get the money because you can't demonstrate impact. But you may be a wealthy business person who's setting up a factory in a very poor part of the world who's going to create lots of jobs, then we would be interested in you. But even better, if you're a person that comes from a deprived area who's never worked before and you're starting a new job or starting a new business, that's the best kind of investment for us. And we will be showing you a couple of those in a minute. So if we click on to the next one, So let me do the boring bit. We've now done about 5 million quid's worth of CBILS loans. Just to put the flag up, I haven't got a flag, but anyway, I'm waving one. We were one of the first in the UK to get a CBILS loan out of the door. So it was launched on the Monday, and we got a CBILS loan out on the Wednesday, and it was to a little company up in Hartlepool. So we were really proud about that. So if we just go through the CBILS things that you really need to know about, okay? The problem with CBILS, and I'll just say this now compared to bounce back loans, which I think Mel's going to cover a bit later. The bounce back loans, you're almost guaranteed to get it. If you have a pulse and you can breathe and you can fill in a form online, you will get the loan, okay? You have a number of self-declarations that you have to make, but nobody's going to check up on them. Whereas with a CBILS loan, forgive me for this, but there is a significant amount of due diligence that has to take place in order for you to get that CBILS loans. And as the lender who is relying upon the government's guarantee, we need to make sure we've ticked all those boxes. So I'm just going to do this boring eligibility bits just so that you're aware that you're not wasting your time filling in a CBILS form if you don't tick these eligibility criteria. So point one. If we can click that, Mel, please. Okay, it's coming. You can put them all on there, it's fine. Oh, there we go. Okay, so what is absolutely critical, all right, so this is separate to any of the checks that the financial institution may wish to take. So when SAB wants to do a loan, or if we want to do a loan to you, none of this relates to your viability. This just eligibility issues that allows you to apply for a CBILS loan. And if you don't get these, or if you can't tick these, then you can't get one. So first of all, are you an SME? And the reason why that's important is because there's this weird thing called state aid. State aid is a throwback from the European Union, and surprise, surprise, we haven't left yet, so it still applies. So every element of what we do under a CBILS loan is governed under the state aid regulations, the rules. And if you don't apply, if you don't have these things, then or if you don't abide by them, then there are consequences. So you have to be what they class as a small to medium-sized enterprise. The definition is there, under 250 employees, turnover less than 45 million. But the next point is the bit I really want to emphasize, because nobody understands this, but this is utterly critical. All right. Now, it applies on a bounce back loan, but under a bounce back loan, you only have to do a self-declaration. And normally it involves a little box on the form that says, I am not an undertaking in difficulty. And nobody knows what that means outside the nerdy world of state aid, right? For me as a lender, I have to understand what an undertaking in difficulty is. And essentially, and just to kind of put it in context, if you are not solvent as of the 31st of December 2019, you are not able to get a CBILS loan. And what we mean by that is if you have sustained losses for the last 3 years. So it's not the normal insolvency test, which is the test about are you able to trade out of the situation. Under the undertakings in difficulty test is if you have accumulated losses for the last 3 years. And if you have accumulated losses for the last 3 years, as of the 31st of December 2019, then you are not able to apply for a loan. It can only be for £50,001. And the fourth test is, are you in difficulty? And the answer to it is, well, of course I'm in difficulty. So that's fine and easy to do. So that's the boring bit over. Let's move on to what else CDFIs do, just give you an idea. So coming back to this idea of impact, some of you may have come across this idea of United Nations Sustainable Development Goals. That's what UNSDGs means. Everything we do, and you can go onto our website and check our social impact report, we measure using the UNSDGs. So this chap here, who's based in Scarborough, which was the first ever resort in the UK, just throw that one, happened in Yorkshire. He harvests seaweed naturally and by hand, and he's taken on a number of apprentices to help him do that. And so he sails out into the North Sea. He pulls out the seaweed from the ocean, cleans it up, does some magic to it, and he sells it to people down south who like eating seaweed. And for that, we gave him £25,000. We click on to the next one. Again, there's a thing about Scarborough, but a lot happens up north. This little social enterprise in Scarborough was working with NEETs, as they're called, not in education or training. And these guys took some of these apprentices. They bought a house that needed a huge amount of work doing to it. They got these guys trained and the qualifications they needed as they redeveloped the house. And then they sold the house, and then they moved on to the next one. And it's a brilliant little idea. And £80,000 was all it took to get those guys off the ground. And if you look on the bottom there of this sheet, that's straight out of our social impact report, you'll see the little boxes. Each one of those relates to a UN SDG that they've satisfied. Next one, please. Thanks. Now, this lady's based up in the northeast, just outside of Newcastle, and she got a 50 grand loan. She's a female-led entrepreneur. And the reason why I emphasize this one is because she comes from the Jewish community, where it's not normally allowed ladies to have people running the business. But she got special permission from her community leaders to be the business director. So we lent the money to her, and she's improving. She's putting in boilers and improving people's fuel efficiency through the work that they do. So she's great. It's shown her. So £50,000. That just got that one off the ground. So that's me done. I've done the boring bit. I've done the interesting bit, and I just wanted to emphasise the ethical bit. So if you want to check out our website, befund.org, and you can download for nothing. It's great up north. Thank you, Mel.
Great, lovely. Thank you very much. Oh, stop sharing. There we go. Thanks very much for that, Stephen. And for some more detail on how CBILS works as well. Have got a few questions that we're going to come to, only 3 so far, so I'm sure that we'll get some more as we move through. I think one of the things that would be really interesting as well, Stephen, perhaps again, just want to think on for when we come back to questions is, is there any difference in the sorts of inquiries that you've seen since the coronavirus crisis has happened? So it'd be good to find out if there's any difference. Okay, Tekla, we're going to move on to you, and you're going to tell us a little bit more about, so not emergency funding, but funding that you were offering before that's still out there and live, but perhaps some examples of organisations that are coming to you. Okay. Am I sharing your slides? Sorry, just remind me, or are you going to do them?
Yeah, I think you kindly offered.
I'm going to try to that.
Thank you. Yeah, so while Mel's sorting that out, so my name's Tekla Szerszynska, and I work as an investment officer for GMCVO, which is Greater Manchester Centre for Voluntary Organisation. So I've only got 2 slides, but it just to give you something to look at, really, and also they'll help give you an overview of the support that we provide for social enterprise, including social investment, and also more details of our Access to Growth Fund. When we look at the Access to Growth Fund, I'll talk about the way our applicants and investees are coping with the COVID-19 crisis, along with some recent examples of successful applications. So GMCVO is the Voluntary Community and Social Enterprise, or VCSE, sector support and development organisation covering the Greater Manchester City region. We work with and through the VCSE sector for the benefit of the people and communities of Greater Manchester. Along with our social investment programmes, we offer a range of wider support for social enterprises. Often those seeking social investment will also want to take advantage of other resources and support to help them be in the best position to grow their sustainability and social impact. So we've got a few things on this slide here. We've got Adventures, which provides hosting and support for startup community enterprises to help new organisations to get going. We provide the formal structure, so the governance, legal status and banking facilities that aspiring entrepreneurs can plug into so that they can concentrate on testing and growing their venture without needing to set up a new charity or company. Behind the scenes, GMCVO hosts the Greater Manchester Social Enterprise Network, GMSEN, which is part of a wider effort to grow the social enterprise community and movement across Greater Manchester. So the network helps connect social enterprises across the city region and provide information and signposting. And it brings together local social enterprise networks, both geographic and thematic. The GMSEN website is a bit of a treasure trove for social enterprises. And along with resources and information, it offers a social enterprise directory, which Greater Manchester social enterprises can register on. And we've also got the Connecting Black, Asian and Minority Ethnic Social Entrepreneurs programme, which is aimed at connecting social entrepreneurs in the BAME community to opportunities for development and growth. It's funded by the Connect Fund and the People's Postcode Lottery, and it's delivered in association with Greater Manchester BME Network. The programme recently established the Greater Manchester BAME Social Enterprise Network. You can see a photo from the launch of the network in the bottom right-hand corner there, and has just launched a capacity building support and mentoring programme, which is being delivered in conjunction with School for Social Entrepreneurs. So other resources we have include a social enterprise bulletin, which goes out every month. And we've just launched a social enterprise support directory, which brings together information about organisations and individuals who provide various forms of support for social enterprises. The support directory is also useful for organisations applying for the REACH fund, which we're an access point for, and which provides small grants to help organisations get investment ready. So in the middle, we've got our little image for our social investment programme. Our social investment programme is called GM Social Investment, and it provides social investment for BCSEs looking to grow what they do. This currently includes 2 funds. We've got Access to Growth, which I'll talk about more in a minute, and the Resonance Community Developers Fund, which offers loans of up to £3 million for projects looking to develop community-led and owned assets for both affordable or social housing and sports facilities in Greater Manchester. We're the local delivery partner for this fund, providing support and connecting community groups with local partners to help deliver the projects. We're also going to be launching some new funds next year in Bolton, Stockport, Oldham and Wigan as part of the local access programme, which is aimed at tackling inequality. So yeah, onto the Access to Growth Fund. We've been delivering this fund for nearly 3 years, and it's recently been extended for a further 18 months to January 2022. This fund is provided through the Growth Fund, which is managed by Access, the Foundation for Social Investment, and blends grants from National Lottery Community Fund and loans from Big Society Capital. So this fund offers blended finance, which means that each investment includes a proportion of loan finance and a proportion of grant. Our investments offer an average of 20% as a grant and 80% as a loan. The grant is used for something which helps an organisation get started with their plans and helps make social investment more accessible to smaller organisations or those who haven't taken on a loan before. Social impact is key here, so this is the ultimate goal of our investments. Growing your profits can help you grow what you do and be more sustainable as an organisation, which is obviously a great thing. But we want to understand how this will enable you to increase your social impact and make a bigger difference to people's lives. And we offer investments at the smaller end of the scale, between £10,000 and £50,000. And this is because we recognise that this was a bit of a gap in the sector. We wanted to make sure enough of these smaller investments were available to those who need them. Another thing that makes these investments more accessible is that they're unsecured, which is quite important, and it's not on here actually. I've got a few photos here of some of our investees. We've approved 40 investments so far, and here's 4 of them, so you can just get an idea of the kinds of things we invest in. Obviously, the current crisis has been really challenging for many charities and social enterprises. We've been in regular contact with our investees and applicants to keep informed of how they're managing, and we've also been able to offer some flexibility to help them cope during the crisis. As a social investor, of course, we're always going to want you to make your loan repayments on time, but because our investments are driven by our values and because social impact is the ultimate goal, we have some room to offer flexibility when times are tough. This means we've recently been able to give our investees a 6-month repayment holiday to help them weather the crisis. And we also have to thank the funders for enabling us to do that. And we've also introduced a 6-month interest-only period for new investments to respond to the challenges we know many applicants are facing. So in terms of our investees and our recent applications, we've overall seen probably 3 different approaches or situations for organisations. So there are some who are usually larger, who are kind of hoping to be able to ride out the current crisis and the associated dip in income and pick up their plans again as things go back to normal or the new normal. There are some who are usually smaller and often maybe hospitality based, who are really struggling as they're totally unable to operate. So these organisations are often putting things on hold completely until they can start to make sense of how the future may look. There are others who've quickly adapted at least some of their offer or developed new services in order to be able to carry on supporting their beneficiaries and continue sustaining themselves through the lockdown period. Recent applicants really have probably been a mixture of the first group and the third I mentioned. And I just wanted to give you 2 examples of applications that have been successful recently, also in relation to how they've handled things during the crisis. So one recent application that's just been approved was Ants Junction. Ants Junction are a charity who work with business sponsors and partners to deliver support to vulnerable members of society, supporting local people into fulfilling employment and social participation. And the people they support include those not in education, employment or training, and adults with learning disabilities, and people who are coming through or have been through the prison system. And so they applied earlier in the year, and they were working to address some queries and feedback from the panel when the crisis hit. Their new successful proposal was more focused on proven business opportunities and key ways that they could grow their social impact. It included details of 4 actions they've taken in order to continue delivering their services while adapting to the current restrictions. These included shorter term responses, such as securing funding for IT kit to help their most isolated and vulnerable beneficiaries stay connected and access their support, and also developing a chat system to keep in touch with their beneficiaries, maintain their support programs and react to emerging needs. This need to adapt also led them to include the development of more digital and communications tools in their proposal to enable them to improve and expand their services for the future and make their work more scalable to deal with their predicted growth and demand from the community. The panel liked their focused approach and the fact that they responded thoughtfully to current challenges and found ways to support their beneficiaries through the crisis. The second one is STEAM Hubs and Pubs CIC, which has been set up by the group who run the Old Abbey Tap House, which is a community-focused STEAM hub in a pub, as they call it. So STEAM stands for Science, Technology, Engineering, Art and Maths, and it represents their interest in bringing these different elements together through creative and educational activities and approaches which connect the universities and local residents. They'd received support from the Reach Fund to build up the details of their business plan, and they'd also done a lot of work to prepare a plan for how they would build up their business and grow their impact in their community. The crisis hit shortly before they had planned to submit their application. They've since been very busy developing a pay-as-you-feel Meals on Wheels service for vulnerable members of the local community and growing their food takeaway delivery service to help generate revenue over the lockdown period. They chose to go ahead with their application for a 50k investment and included details of the adaptations they've made since the crisis hit and adjusted some of their projections to account for the challenges caused by the crisis. While the investment panel liked their application and would have been happy to approve it under normal circumstances, because of the uncertainty around when pubs might be able to reopen, they decided to ask STEAM to submit an amended proposal for a smaller initial investment. This first investment was to focus on elements of their business they want to prioritise during the lockdown period and which don't rely on the reopening of the pub. The panel then suggested a review in 6 months, which would also consider the second stage of the investment. This approach worked and their initial investment was approved this month. So in summary, I think really, we want the application process to be supportive and involve a conversation between us and the applicant, where we can work with you to find the right approach for an investment. And during this difficult time, we recognise that that's more important than ever. So always really just ask, have the conversation, I think is the point really. Okay, that's me. Thank you very much.
Hey, thank you, Tekla. That was great. It's really good to hear some live examples and also good to hear more about the flexibility that often social investors are able to offer. Something I get asked all the time, how social are social investors? And I think an impact investors, I think it's probably when your back's against the wall that you're most likely to probably be able to feel that. I'm going to very briefly cover business bounce back loans, and I'm going to hand over to Ishita, not least because I think Ishita's going to answer quite a lot of the questions actually that are popping up in the question and answer pop-up that people are typing in. So it would be remiss of me not to cover BBLS, so business bounce back loans. Right at the beginning when there was a lot of work going on to try and map where the needs were, and you've heard Rob talk about how the Recovery and Resilience Loan Fund is adapting, and Stephen talk a little bit about the sorts of organisations that are wanting to borrow money. Some other things that we were picking up really quickly was what happens if you want to borrow quite a small amount of money, probably £50,000 or less. And actually, again, not surprising, because Social Enterprise UK's research has consistently said that social enterprise or charities want to borrow less than 75, but actually this year, when they did their biannual survey, it came down to £50,000. And also, one of the biggest criticisms probably of government in the early days of the crisis was that people need to get hold of this money quickly. And so as soon as business bounce back loans were announced, to some extent, social investors felt as long as these were accessible to social enterprise and charities, that took care of a big piece of demand for funding. So business bounce back loans, has already been alluded to. You can borrow up to £50,000. It's an online application. You should be able to get your hands on the money within, it's 48 hours, the response that you will get. You apply through one of the big high street banks, essentially. I've heard some different views. I've heard that there's one particular bank, if you don't bank with them, probably best to make your application through. I've heard there's one particular bank that it seems to be that people aren't managing to do all the self-declaration. It comes back with, we need more information. I've encouraged the social enterprises and charities to go to them and not to sit and wait, because they're tied up in the same sort of level of waiting. But essentially, business bounce back loans probably offer the most competitive, quickest form of finance that social enterprises and charities could access under £50,000. So it's important that you know about them. I'm going to put in the chat the link through to the British Business Bank bounce back loans page, so that if you want more information, you can find them. That, of course, will come with the caveat that it is money that you're borrowing, and nobody should borrow money unless you think that you have a plan of how to repay it. And for some organisations, and again, we'll come to this in the chat, still having access to a grant might be a better option. There aren't any social investors at the moment administering business bounce back loans. I do know quite a lot of social enterprise and charities who have managed to access them. What I would say, if there is anybody that has looked at a business bounce back loan and hasn't been able to get hold of it, I'd be more than happy and keen to talk to you individually, because I'm trying to just make sure that they are working for us. I'm going to put the link up to that in the chat, and I'm going to hand over to Ishita. There's been lots of questions on the chat, Ishita, about it's been great that we've got some regional representation, Manchester, it's great up north, but what about if you don't happen to be there, and how do you find out who's lending what and where?
Good, so now seems like a perfect time for me to join. Let me just share my screen. So, hoping that everyone can see that okay. And I know a lot of people who have joined today will probably have come across Good Finance and the work that we do and been on the website already. But if you haven't done so recently, then what I'm going to do is just take you on a quick tour of the website and some of the stuff that we've been doing recently to help our users navigate this kind of very rapidly changing world of funding and finance, and hopefully answer some of your questions along the way. So the first thing that I want to start off with is our investor directory. So on Good Finance, we have an investor directory of social investors and the funds that they have live. So we have over 80 social investors listed, and I think, over 60 funds. And you've sort of always been able to search those investors and the work that they're doing by location, the amount you would like to access, the type of financial product, and the social issue. What we've been doing since this kind of crisis has unfolded is enabling our users to search for sort of COVID response funding. So what you can now do is, if you go to the section that says financial products offered, you can actually search community investment enterprise facility, coronavirus business interruption loans, emergency finance options, and resilience and recovery loan fund. We've talked about all of the other ones, but just for the purposes of the website, the way that we define emergency finance is social investors that are open to new lending and are able to respond to you within 4 to 6 weeks. So what you can do is that you can search that. You can then say, I'm looking for £10,000 to £50,000, and maybe health and social care and family, friends and relationships. And you might have regional work, so you're looking for investors that invest anywhere within the UK. and then you go filter results, and what it will show you is a list of social investors that hit those criteria for you. This orange icon essentially signals that they are open to emergency lending and new lending. And so what you can do is sort of go through this and personalize it based on the location that you're in, the amount that you would like to access, and the sort of social issues that you are focusing on. And use this list as a starting point for contacting investors. If you then actually sort of click into the investor itself, you will see how to get hold of them, their contact details, their website, a little bit about what they're doing during COVID, and some of the funds that they have live. So the investor directory, if you're actively looking, is a really good place to start. Another place that I just want to take you to as well, because I recognise that a lot of people have been asking about grant funding and the various different government schemes, and it's important to note that the investor directory is very much social investor focused. So if you're thinking about grants or other types of finance options, then a really great place for you to go to is our COVID-19 resource hub. So we've been working really hard to keep this up to date and curated with information that is relevant. And you can access lots of different things on here, from sort of resources on remote working to, webinars and pro bono support to, what's out there for VCSE organisations. But in this section is where you can find all of the other various types of funding that are available. So we've split them out into sort of UK-wide funding that's government funding, things that social investors, trusts and foundations are providing, other types of grants, funding platforms you can use, and then we've tried to find as much grant funding that we can possibly find and sort of split it out regionally. So there is over 100 different types of grants and things on there. So if you are looking for grants or trying to understand more about the various different government support schemes, that is the second place to go. Last but not least, I kind of also want to touch upon some of the content that we're doing, because I think it could be really helpful in helping understand what's happening at the moment and helping understand how charities and social enterprises are responding to it. So you've got the investor directory, which is where to go if you're looking to work with social investors. You've got the resource hub if you're looking for more general resources. We've been doing two types of content on good finance. The first series that we're doing is called Your Questions Answered, which is what this webinar is a part of. But we've been taking all of the questions that you guys have been asking us and finding ways to respond to them, whether that's on blog posts or webinars, but really just to make it really clear how these various different things work. So for example, if you want to find out more about the Resilience Recovery Loan Fund, you can go read the blog post. The other thing that we have been doing is a series called A Changing World. So we've been looking at how charities and social enterprises have been responding and adapting to a changing world and gathering their lessons. So I just want to draw upon this one that we did recently with the Crawford Arms. And one of the reasons why I wanted to highlight it is because they're a really great example of an organisation that has used lots and lots of different funding and finance tools to kind of build their financial resilience. So during their startup phase, they used bursaries and grants and a bit of crowdfunding. As they were looking to sort of grow and get established, they used community shares, they took an unsecured loan, they had some blended finance, and they also used a bit more grant. And now, sort of post-COVID, they've used the job retention scheme, the pay it forward scheme, small business grants, and they are also in process applying to more grants. So if you kind of go on the website, we did a podcast with one of the founding members who talks through all of the different finance options that they used and how they navigated them, which might be some interesting content as well. So yeah, that is some of the stuff that we have been doing on Good Finance. Three key bits really: use the investor directory to search and filter for your organisation, and go onto the resource hub to access information on other types of funding and grants available, and use our content to kind of understand in context how charities and social enterprises are using all of these different tools. And I think that is it from me. And yeah.
Lovely. Thank you very much, Ishita. That's great. We've got quite a lot of questions on the chat, which I'm going to go to shortly. There were just two other things really that I wanted to come to. I talked a little bit about understanding all of the different schemes and how they apply. I would urge you to check out Good Finance has a sort of one pager that goes through all of the different options and how they apply. So it's a really useful all in one place. And the other thing, it shot up actually just briefly on Ishita's screen when she was sharing. There are some questions on the blogs, which, if I'm honest, it may well be that repairable finance is not the right thing. And if that is the case, we had a guest blog from one of our team, Joanne Hayward, who's an experienced fundraiser, and she did her top 10 tips on raising funds in an emergency fundraising. So, you know, if repairable finance isn't for you, then I would check that out. Also, somebody shared as well Funding Central as another place for you to go and find some more great resources. So I'm going to come to some of the questions that we've got on here. But before I do that, I'm just going to come back to Rob right at the beginning. That question that I posed about, is there an ideal amount of money? I know we've talked about business bounce-back loans as being available up to £50,000. Where essentially was SIB looking to target, and what are you seeing in terms of average lending appetite for the Resilience Recovery Loan Fund?
Yeah, I can answer that. I mean, there are some, actually, interestingly, we've probably found more demand at the higher or top end of what we offer. So we do offer between £100,000 and £500,000 loans. That said, there is some eligibility on that scheme with the minimum turnover of 400,000, but actually we've seen a lot of applications at the 500,000 level. So about a third of applications have been for the maximum amount. We actually have seen quite a lot of national organisations with large turnover applying to the fund, as well as organisations. So actually, although we are very happy, we don't have a target size. We're very happy to fund the minimum of £100,000. A lot of the demand has been £200,000 to £500,000 so far, and so we are reviewing whether we need to look at the maximum loan size of that fund, for example.
Okay, thanks, Rob. That's really interesting. You know, I think there are a lot of questions about what happens if somebody wants less, and that's really interesting. And just, Stephen, is there, in terms of, you know, has there been any marked difference since the coronavirus in terms of the sorts of organisations coming to you? Is it less inquiries, more inquiries, or anything notable that you'd want to share?
Yeah, for us, it's been unprecedented. We've never ever lent as much. Typically, we would lend about 8 million a year. We've done 5 million in 2 months, and just like Rob, the average loan size has gone up. That's largely because everybody's going for a bounce back loan, and if you need a new Jag, it's a cheap way of getting one. The problem we've got at the moment, though, is that we particularly like to have loans at a smaller level, just so that we can manage the risk in the portfolio. So just having larger loans in the portfolio just makes us slightly uneasy. However, we're here to support businesses, and what is surprising is the viability of the businesses is very good. You know, generally speaking, these are businesses who would never normally struggle to get finance from a bank. So again, just goes to show, doesn't it? The banks kind of, in times of difficulty, just kind of do their usual, come on lads, let's pack up and keep our money in the vaults. It's organisations like Rob and ourselves and others who pick up the slack. So yeah, happy to help wherever we can. And we've been supporting all over the country. I think the furthest we've gone down is to Orpington in Kent. We've had inquiries from the Isle of Wight. The only place we haven't done a loan so far is Scotland, but I think they've got plenty up there.
Yeah, Yes, that's very true. Actually, there are some in-country variations for Wales and Scotland and Northern Ireland. Some bits of funding that unfortunately aren't available to England. So yeah, definitely worth. If we have got anybody on the call that is from Scotland, Wales, Northern Ireland, I would urge you to look even more widely, and we can perhaps cover those. Okay, I'm going to go to some of the questions that we've had, some of which have been answered, but I really wanted to go back to them because I think there's some quite interesting ones. So we've had a couple of questions, one from a museum, from a trustee of a museum, another one that was from a sort of culture and tourism background, and a couple that have, when I've asked them the sorts of amounts that they are planning to raise, there's a sort of variation between 50 and 100. I think we're probably clear here that if you want less than £50,000 and repayable finance is right for you, then business bounce back loans are definitely an option. And if not, then you can check out who else from Good Finance can make that lending to you, including something like the Community Enterprise Investment Fund. I have a couple of questions, particularly around accessing business bounce back loans. There's an interesting, nice piece of learning. I said I needed a bit of learning from the chat, which looks good. I'm going to share the names of the organisations. Why wouldn't I, from the mainstream banks? But anecdotally, and I think it's James that's backed this up on here, I'm hearing that people who have applied through Barclays, social enterprise and charity applied through Barclays, seem to be stuck in a bit of a 3-week loop waiting for feedback, which shouldn't really happen. And some of the mainstream banks are insisting that people have a business bank account with them before they will make the loan. I don't actually think that they necessarily have to do that, but that's that they've chosen. And I've also heard anecdotally that HSBC don't ask for that, so that might be something that's worth waiting. And I'm going to get James up, and I'll catch up with James afterwards.
Sorry, Mel, just to confirm some of the stuff you said there, we've heard that HSBC will do non-client loans, but they'll prioritise clients.
Yeah.
And I've heard that social enterprises are stuck in the bounce back loop because banks don't know how to deal with social enterprises, so they don't know how to classify them. So the SME test thing that they're just doing the quick checks on is what's causing the hold-ups.
I think one of the things that we will prioritise is making some of the learning available. So the Crawford Arms that we talked about, they've got a business bounce back loan. In fact, we've heard of quite a few social enterprises and charities who are managing to navigate it. So I think it's us trying to learn and understand what's happening in those ticking those boxes, that self-assessment process that's stopping social enterprises and charities getting through. On a wider note, I'm not sure how everybody would be interested, but we're also, Big Society Capital is also starting to talk to the British Business Bank about how we can try and share, with CIB and many more, what's happening, what information they're collecting, so that we can try and work out again whether that helps or disadvantages social enterprises and charities. So let's go to some of these questions that we have here.
Mel, can I just drop it? Can I just add something on bounce back loans that might be helpful? You can get a bounce back loan of under £50,000, and you can still apply for a larger CBILS loan, but you can't hold both at the same time. So if you get a quick loan from bounce back loans of 40,000, but you find later on you actually need 100,000, 200,000 to borrow, you can apply to CBILS lenders like the Resilience and Recovery Fund, but you need to use a portion of that money to pay off the bounce back loan. You can't have a bounce back loan and a CBILS loan at the same time. So if you go for a higher CBILS loan later on, you will just need to use some of that money to pay that off.
We're actually finding that people are getting a bounce back loan and then almost 2 days later applying for a CBILS loan and not telling us that they have a bounce back loan. So yeah, you just need to navigate this quite carefully, because it could come back and haunt you later if you're not careful.
Yeah, I think that's really good advice to both organisations. So I have two questions here, different organisations, but I suppose a similar story. So one is from a charity that houses a museum, and effectively they lost their income during lockdown. They have the Charities Bank, they have an overdraft facility, but essentially that's going to be quite high in terms of interest. And then I also have an organisation that is in the process of starting up some nurseries, but I've obviously been delayed in terms of being able to start moving forward. Their questions really are, and there's another one actually about scaling up for organising holidays abroad for people with disabilities. Essentially what they're asking is, does repayable finance work? There's a couple of questions around grant, which I hope we dealt with in terms of giving some resources. What would be your advice, I suppose, to organisations who either have lost income or who were, particularly those that were sort of really starting to scale up or had business plans advanced in place, as to whether repayable finance might be a viable option for them? Tekla, do you want to go first in terms of just that option around how would you help somebody to work that out?
Yeah, so I think, you know, obviously as I'm not sure if you can see my screen flashing, but it is flashing, sorry about that. Yeah, I think considering obviously that, you know, around 80% of our investments are repayable loan, your application would need to, you know, demonstrate a plan to develop, to generate income that will be able to repay the loan. So, you know, there is that aspect that you can't really escape. Yeah, it might be a case of kind of looking at what aspects, as I said, you know, with the examples I mentioned before, for some organisations they're saying, okay, we're kind of regrouping, we're looking at what things we can do now, what new ways we can do the stuff we're already doing. And then, you know, it might be looking at, you know, a stage of an investment for now to get you through this period and to build up some of the stuff that you found the way to start doing. And then maybe another stage once we get a bit more clarity on how the future will look, you know, reviewing where you've got to, reviewing what the possibilities are going to be for business in the future. Because I think that's part of the issue, is the uncertainty, isn't it, really, for a lot of organisations? It's kind of like, will pubs open, you know, autumn? Will pubs never open in a normal way again? You know, those kind of questions. So I think it would probably be either a case of, okay, you've managed to develop a new income stream or a different way of generating income, or look at what you can focus on now and prioritise the things that are going to get you through and going to lead to some revenue. Yeah, that would be probably my response.
Great, thank you. Stephen or Rob, anything to add on that particular question? Stephen, you're on mute.
No, I'm okay.
Okay. Rob, anything to add?
Just briefly, that we, I mean, like Good Finance and others, we've spent a lot of time. We have collated a page of other resource for grants and other support programs that we're aware of. I'll post that link in the chat. So we don't actually lend for organisations that have been operating for less than 2 years under this fund. So we would signpost to other sources. Just to add on a separate point that came up earlier, the Resilience and Recovery Fund lends UK-wide, so Wales, Scotland, Northern Ireland and England. I don't think we've been as clear as we can on our communications, but that it is available across the 4 home nations.
Lovely, thank you, Rob. Yeah, so as Ishita said, you know, we've got a good regional representation here, but there are lots of social investors that do lend either England-wide or UK-wide. I'm going to just try and wrap us up. I'm going to give my panellists just notice that I'm going to come to you in a minute and ask you just for one top tip. If there's just one thing that you could share with everybody that was here today, what would be the one thing that you want to leave them with? A couple of practicalities. We've had some questions about whether this webinar will be available, and the Q&A. Yes, it will, along with all their helpful links. Luna will get that out afterwards. I'm going to save my my top tip right to the very end. Again, host's prerogative. And I'm going to come to Ishita first. So one thing that you want to share, Ishita, with everybody?
Yeah, of course. And this is an insight that we've had from our Changing World series, from speaking to charity and social enterprise leaders. But I would say one thing that's come up over and over again is how important it is to communicate with your stakeholders and ask for help. You know, almost everyone said when we reached out to people, when we reached out to our funders, our trustees, our advisors, you know, we found new routes and new avenues for help. So definitely just communicate with your supporters and your stakeholders. Oh, I think it's still on mute, Mel.
Me, I'm doing it now. Stephen, over to you next. Your top tip.
Yeah, I think you've just got to. It's no point putting shed loads of time into a 12-month forecast and all that kind of nonsense, because the way things are working at the moment, it's anybody's guess. So the best you can do is do a concise and clear 3-month analysis. And I would take the next 12 months into 4 chunks. So the degree of certainty diminishes the further out you go. So the next 3 months, you should have a clear view of what you need to do. Then you have a hope for the second 3 months and aspirations thereafter. But don't try and come up with a 12-month forecast, because it's meaningless, and we wouldn't buy it. We just want to see that you've got things under control, you've assessed the risks, you understand some of the challenges, and you've got a rough way of trying to deal with it, because everybody's going to be doing it by, you know, what's the word, on a contingent basis. It's hand to mouth at the moment.
Lovely, thanks, Stephen. That's great. Tekla?
Yeah, I think maybe similar to what Ishita said, but I think really just communicating with your potential social investor. You know, if you're thinking, okay, is this appropriate for us? You know, or you might be thinking, oh, I want to present the best, perfect image of what we are. I don't want to be honest. I don't want to open up about our challenges, but actually, you know, if we can understand your challenges and we can help you think through the best approach. Also, as I said, you know, I think it's similar for lots of social investors, but our approach is quite supportive. You know, if you do an application, if you put together a business plan and we take it to the investment panel and they say, great organisation, but there's some things we're not sure about, there's some more information we need, there's a few questions we need to clear up, you know, we can go back and answer them, we can work with you on that. So it's not a kind of dragon's den, scary situation. You know, if we can see the value of what you're doing, we will want to try and support you, and it's about working with you to do that. So I think it's really keeping in touch, communicating, and especially also when you have been invested in, you know, letting us know when challenges crop up if they do, so we can try and support you through that.
Right, lovely. Thank you, Tekla. Yeah, we often talk about Dragon's Den. So Dragon's Den, we're a lot more friendly than dragons, aren't we? Right, Rob, I'll leave you to do your last top tip, and then I'm going to round us up.
No, thank you, Mel. It's good to come after the others, because it's probably highlighted one of my points is that each lender and fund is different, and even if they're operating coronavirus business interruption loan guarantee, that's the guarantee to the lender, and what sources of capital they have and what end criteria and eligibility they have and targets for their fund will actually be different. So all the lenders may require different information. Rightly or wrongly, we do require a 12-month cash flow. So point in case difference to Steve there. And so I think the main thing is actually if the eligibility for your organisation is not really clear on the website or information, push your lender and ask them whether your organisation will be eligible for funding under their scheme, because the last thing we want is people to progress and use up their time when it could be clear at the beginning, and sometimes us as lenders don't always communicate that as clearly as we hope to. And secondly, don't rely on one source of funding. Do apply to multiple places rather than, if you need funding, rather than rely on one source, because the outcome may not be the one you want.
Lovely, thank you very much, Rob. That's great. So I am going to round up by saying there's an awful lot more resources on good finance, some great podcasts. I mean, peers are always the best way of sharing their learning and information. There's also details on our, as I say, the top fundraising tips and also information. We had a great session with Jason from Crowdfunder and his Pay It Forward, so you can find out more about that. And I think I'm going to finish with saying that, you know, basically repayable finance is taking on a loan. And in these uncertain times, you need to have a balanced view of how you're going to repay that back going forward. I would say that in any case, repayable finance shouldn't be your sort of situation of last resort. Don't sit there and wait on the grants and then when they don't come through, because we usually say to people that repayable finance is sort of not an option of last resort. I would say, I'm rounding it from what everybody said, look at everything that's available, get advice from the peers, check out some of these resources you've been asked. If we haven't covered your question, then do get in contact and one of us will try and help. Meanwhile, I'm just going to say thank you to all the panelists. It's been a great webinar. Got through it with too many tech issues. Nobody's had, you know, husband's not coming in shorts, dog's not been asking me for a walk, so, you know, all bonus really. Thank you to everybody that posted questions. We had lots. I hope we answered the vast majority, but as I say, if not, we're going to be following up with presentations, Q&A and contact details. Thank you all very much for your time and have a great afternoon.